All right, so we are going to break down the Backdoor Roth step by step. And then I'm going to show you how to fill out the tax form that you need to fill out at the end of the year to make sure that you're good with the IRS as far as the Backdoor Roth. But before we really dive into that, you kind of need to know, like, is it right for you and what it is? There's so many things that you hear, like the difference between a conversion and a contribution. What's the Pro Rata Rule? What's the different retirement account? Guys, I'm going to break everything down for you, nice and simple. So you'll know if it's, something that you need to be doing, something that you don't need to be doing, maybe something that you might have to revisit, like me. I was doing a regular IRA, Roth IRA for years. And this year was actually the first year that I had to do the Backdoor Roth because of my income limits. So first, let's just break down and see, like, if you should even be watching this video. Like, is this video and is the Backdoor Roth something that you should consider? All right, so the teacher and me, I had to get the digital whiteboard out for you visual learners out there. I just want to break down what the retirement accounts are. You'll probably fall into one of these types of retirement accounts. So first and foremost, we have our employee-sponsored 401k, the 403b, and the 457. And this is something that we are going to call our tax-deferred accounts. And what this means is that we are going to put money into that from our employee-sponsored plan. And this currently, at the time of this recording, has a maximum contribution of $19,500. So you could put $19,500 in. That's going to lower your W-2, and then you don't have to worry about it. You will pay taxes on it later. Now, are there Roth options of this? Yes, but then we're going to be splitting hairs, and that's not for this video. Then we have our IRAs. So our IRAs are going to be traditional. You might see a simple IRA. You might see something called a SEP IRA. And then way over here, I want to separate it. I want to call this the Roth IRA. Now, how are these a little bit different? Well, this is tax deferred or post-tax, where the Roth IRA is only going to be a post-tax. Now, I wrote contribution here because this is going to be the first time we can really start to talk about the difference between what a contribution is and what the difference between a conversion is. Right now, these have contribution limits. So the contribution limit for this particular retirement plan is $19,500. The limit, the contribution for this is going to be $6,000 for all IRAs. So the combination of any of these IRAs right here has to be $6,000. So you have the option of putting in $6,000 into just a Roth IRA or $6,000 into a traditional. Any of these IRAs, they can only max up to $6,000 total. So you can see one of the major benefits of your employee-sponsored plan is the fact that you have a limit of $19,500. That's a ton of money that you could put in. Now, the wonderful thing about contributions is you can take your contributions out, and this is a common myth or misconception when it comes to the Roth IRA. When you contribute money into your Roth IRA or traditional IRA, you can take that money back out if it's been a post-tax contribution. So you put that money in, if you need it out, boom. I've used mine as an emergency fund. It's the capital gains and the growth. Those are the things that get penalized and that you can't take out until you're 59 and a half. So when we contribute, right, that's not a one-way street, where a conversion is going to be a one-way street. Now, in the FIRE community, they love to use this term called the Roth Conversion Ladder. Now, what a conversion is that's a one-way street. So what people want to do is they are going to take money and they are going to convert it down into their IRA or directly right into their Roth IRA, depending on their strategy. And here's why you might do that. You leave your job, 401k plan, a lot of fees, maybe it sucks. So you want to take it and put it into a Vanguard traditional IRA with not a lot of fees and let it grow tax deferred there. So you can make an option to convert this money from your 401k, 403b, or 457 down into a traditional tax deferred account. And here's where we can start to talk about taxes. If you continue to be tax deferred, then we don't have to worry about any tax implications. And that's a good thing, okay? But what we're going to be talking about today with the Backdoor Roth, there are going to be some tax implications that you really need to think about it. After you do this conversion from your 401k, 403b, and 457, you can then put money into your Roth. That's something called the Roth Conversion Ladder. I have a video about that. I'll put that in a link below, but that's going to be for people that want to convert 401k money, 403b, and 457 money into the Roth IRA. The reason that we're making this video for the Backdoor Roth is because there are contribution limits, but there are also income limits. Now, the income limits is really why we want to do the Backdoor Roth. We see that for a traditional, simple, and SEP IRA, there is no income limit. So you can contribute up to $6,000 into that account regardless of what your income is. But the Roth IRA and its ability to grow tax-free for its entire life, and there's other pros like no required distributions when you get to a certain age, but they put a limit on how much money you can make before you are no longer allowed to contribute to the Roth IRA. And if you are a single person or a single filer, that right now, as of the time of this recording, is $139,000. And if you are married, even though your Roth IRA is your own Social Security number and it's separate from your spouse, when it comes to determining if you are allowed to contribute to it individually, the $206,000 limit is going to be how much money you can make. Now, there is a little bit of a phase out period, I believe, from like $196,000 up to $205,000, where if you make in that amount, you can contribute a little bit. To be honest, guys, if you are in that $200,000 combined income, you're really going to want to be thinking about doing the backdoor Roth. Now, if you want more reasons outside the fact that the Roth IRA just grows tax-free forever, then you can just look into the pros and the cons of the Roth IRA. That's not really for this video. So essentially what's going to happen is I've met the limit for this. So I can no longer put money into the Roth IRA. But what I can do with my high income is I can put $6,000 into my traditional IRA. Then what I can do is then I can convert it into the Roth IRA. And this money is going to go in post-tax. So when I put it in post-tax and convert it post-tax, there isn't going to be any tax implications. So essentially, this is a legal loophole for you to contribute and then convert. Now, are there downsides? Yeah, there's a little bit of downside here. When we make contributions, we can take that money out whenever we want. But on a conversion, there's something called the 5-year rule. You are not allowed to take this money out as a conversion for 5 years. So if you're using the Roth IRA as something like an emergency fund like I have in the past, you have to make sure that you are not going to need this contribution, which is now a conversion, for 5 years. Now with the Roth Conversion Ladder, you are going to have to pay taxes, and also you are not going to want to do the backdoor Roth if you have any money in one of these accounts. If you have tax-deferred money in any of a traditional, a simple, or a SEP, you need to make sure that you look up something called the Pro Rata Rule. And the Pro Rata Rule is really just there to protect the government from you taking advantage of the opportunity to convert. If you have tax-deferred money in one of those IRA accounts, not 401k, 403b, 457, just one of these, if you have money in there, you're going to have to look up the Pro Rata Rule. Maybe I'll make a video on just the Pro Rata Rule because it's a little bit complicated, but there's an equation for you to determine how much taxes you are going to pay upon conversion into the backdoor. It's not that you can't do it, but you are going to have to probably get the advice of a tax professional. So this is really designed to help people that are high earners that want to take advantage of the Roth IRA and don't need to touch the money for 5 years. Now let's jump down into Vanguard's website and show you exactly how you're going to do this step by step. Okay, so here we are inside Vanguard's dashboard, and as you can see, I already have the traditional and the Roth IRA open. If you don't have those two things open already, all you're going to have to do is open an account. To do that, you go to the top where it says My Accounts, and you'll click My Account. Once you get inside My Account, it's very straightforward. It'll show you exactly what you want to do. You want to start a new account, retirement account, traditional IRA. So I can actually show you real quick. You would press Start a New Account, how you fund this, probably from an electric bank transfer. We go in here, they tell you some things you're going to need. You're going to need your bank's routing number, things like that to start this account. Nothing crazy. You're going to go in, you're going to say, we're going to be doing a retirement account, and then right here, traditional Roth. You'll go through, you'll establish that. That could take a couple of days, especially linking the bank account. So like the bank account, what they're going to do, like a lot of banks do, is they're going to put a micro deposit in of a couple cents. You're going to come back to Vanguard, type that information in, and then you'll be set with opening an account. So I'm going to assume right now that you have those two accounts open already. So now that we have those accounts open, what we're going to do is we're going to click right here on the traditional IRA brokerage account. Once I do that, right under your name, you're going to see something that says transfer money. Then after you click transfer money, you are going to want to contribute to an IRA. They're going to ask you, is this rollover an employee-sponsored plan or an IRA? No, this is not going to be a rollover. This is going to be a contribution. So we're going to click no. They're going to let you know about the IRA maximums, and you can see right here it says you've contributed $1,202. For this account, $1,200 was put in. Then realizing that we were going to go over the income limit, we took that money out, started fresh at zero. So now you could see it actually says for 2020, they could contribute $6,000. Now what you're going to want to do is you are going to want to put this inside a federal money market settlement fund. Essentially, this is going to be holding cash. And the reason why is we don't really want this to get any capital gains or any losses. This is essentially just going to be cash because as soon as the money clears, we're going to roll it over immediately. It's not going to be held in here for that long. I'm going to type in the contribution that I want to make for 2020, and you could do this for whatever year you're in. It's also worth noting that if you are between the first of the year and tax day, April 15th, you can contribute from the previous year. So right now it's 2020. You actually have till April 15th, 2021 to max out your Roth IRA. So I'm going to put in the total amount of $6,000 and click continue. Then it's going to ask, where's this money coming from? Like I said, I've already connected my bank account, so you're going to have to do that beforehand. If you have not done it already, they're going to prompt you to do so, and that will just delay the process a couple of days while they connect and link your bank account. After I've linked my bank account, I'm going to go down to the bottom right. I'm going to click continue. This is just going to be a consent that's going to tell you that they're going to be taking money out electronically and that you're cool with that. The last thing we're going to do is we're going to be able to review and submit this. What are we buying? We're contributing $6,000 in individual contribution into the Federal Money Market Settlement Fund. Okay, and how we're going to make this purchase, we are going to do this from a bank transfer. They tell us that it's going to take about 2 days. I'm going to go down to the bottom right and I'm going to press submit. After you press submit, you will get a confirmation. So that's all you can really do right now. Now we wait, we crack open a Corona. We wait for those funds to settle. As soon as they settle, then we'll roll them into the Roth IRA. Once these funds settle, I'll be back right here in a couple days and I'll show you exactly how to do that. So it's been a couple days. I am back. This is actually the longest video it's ever taken me to make because I had to wait a couple days. But we can see right now the money is located now in my Vanguard Federal Money Market Fund. Guys, this essentially is just a placeholder. It's something quick. It's essentially like holding it in cash. We don't want to make any investments with that money because we don't want any capital gains. That's going to lead to taxes, this, that, and the other thing. So right now it's just in my Federal Money Market Fund and it cleared today. Okay, now that the money is in there, here's going to be the next step. There might be another way to do this, but I go up to accounts and then I click balance and holdings. After I click balance and holdings, down here in the middle of the screen, you'll see something that says convert to a Roth IRA. Now here it's going to ask you some information about that. Really all you need to know is convert all or part of this account. You are going to convert all $6,000 into the IRA. Now once you do that, you can scroll down a little bit, and once you scroll down a little bit, you are going to see step 3, choose the Roth IRA to convert. Now, if you don't have a Roth IRA, that's good news. You can open it right here with Vanguard. I already have one right now, so I'm going to convert to the one that I have open already. So in step 4 now, they're going to start to talk to you about taxes. Now, remember, you contributed money into the traditional IRA after you paid tax, okay? So there's going to be no tax implications for you. The tax implications come with the conversion ladder from those bigger ones, from the 401k, 403b. So we are going to make sure that we click, I elect not to have any taxes withheld. Therefore, notice election, do not send a tax withholding notice. That's okay. We don't need that. We're just going to come over here and press continue. So now this is the final review and submit. We'll see that we are coming from a traditional IRA brokerage account and we are going into a Roth IRA brokerage account. Then we are going to click submit. You get your confirmation and you are finished with the Backdoor Roth. Now what we're going to have to do is go into your Roth IRA and you're going to make whatever investments you want inside your Roth IRA. So if we come back out to the main screen now, we can see that there is no money, $0 inside the traditional IRA, and all of that money has been moved into the Roth IRA. But just like when we put money into the traditional IRA, there's going to be a little bit of a settling period. So right now we can see there's total credits and debits. It has not been moved into the Vanguard Federal Money Market Fund for this Roth IRA, which it will in a day or two, and then we can make the investments. You know me, guys, everything's going to be going into VTSAX. So now there's one last step that you are going to have to do when doing the Backdoor Roth, and that is going to be filling out a form 8606, which is going to get attached to your tax return. Now, you do not need to fill this form out right when you do the transaction, right? For example, like right now, I don't think I can. I don't think the form is even out yet. I'm going to go on and show you exactly how to do it with 2019's form. We'll pretend it's 2020. But you do not need to do this every single time. It's going to get done at the end of the year. So I just did a one-time $6,000 contribution. If you wanted to do this 6 times with $1,000 each, you could do that. You would not need 6 8606 forms, right? Because as we'll see in that form in just a second, it's going to be the sums and the total of the entire year. So let me just bring up that form and I'll show you exactly what I mean. So this was a simple Google search, guys, of form 8606. We can see 2019, it's going to come out after the new year. So like if you did it today, you wouldn't even be able to fill this form out, guys. You just keep a note. You're going to get a statement at the end of the year from whichever broker you use. Like I said, we use Vanguard, and you're just going to let your accountant know, and it's not that big of a deal. I'm going to skip all the home address stuff, and I'm going to show you exactly how we're going to fill out each one of these boxes if you do the full $6,000 contribution. If you do something a little different, a little less than $6,000, you'll see where they're going to change. Like I said, you do not need to max this to make it happen, guys. $1,000 is going to be better than nothing. So many people don't act because they're not maxing and they're like, what's the point? Trust me, even $100 every single year is going to make a bigger difference than spending that on something else. So I'm just going to act like this form is 2020, okay? So the dates and stuff, just push them all ahead. So enter the non-deductible contributions to the traditional IRA for 2020, including those made from 2020 from January 1st to April 15th. So what that is essentially saying is you have until the 15th of the year to contribute to a Roth IRA from the previous year. But we just did it, so I'm just going to type in 6,000. Number 2 says enter your total basis into traditional IRAs. Now this is back to that pro rata rule. If you have other money inside of traditional IRAs like we talked about, then this is going to be different. But for us, it's going to be 0 because I had no other money inside those traditional SEP or simple IRAs. Box 3 just says we're going to add those together. Box 4 is a big old yes, so that's going to get 0. Box 5, we're going to subtract 6,000 from 0 and get 6,000. Enter all the values from traditional SEP. So essentially, this form right now would be calculating what your pro rata rule is. So this would be 0. For 7, let's say it says enter your distributions, this is 0. Okay, then we're going to go down to box number 8. Box number 8 says enter the net converted. So the net we converted from the traditional to the Roth was $6,000. Box 9, when I add all those up, we get 6,000. Box 10, when we divide 6,000 by 6,000, we are just going to get 1. So line 11 says multiply 8, which is 6,000 by 10, which was 1. So we're going to put 6,000 here. And it also says enter this into line 17. Okay, so we'll go down to 17 and we'll put in 6,000. Then we'll come up to 12. Line 12 says multiply 7, which is 0, so we can stop there, 0. Line 13, add 11 and add 12, so 13 should be 6,000. See, it's nice and easy when we use nice round numbers and just do the 6,000. So if you do nice round numbers, you'll be fine. 14 says subtract 13. So line 13 from line 3. 3 was 6, so that's going to be 0 as well. 15 subtract 12 now from 7. That's going to be 0 as well. 15B, enter the amount on A, blah, 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 blah. That's going to be 0. 16, taxable amount. We're not going to pay any taxes because once we said we put this in post-tax, so it's going to be converted post-tax as well. Line 16, if you completed part 1, enter the amount on line 8. So line 8 is 6,000. Subtract 17 from 16, good old 0. Part 3, distributions from Roth IRAs. We do not need to complete any of that. Sign and date, you are good to go. Now guys, the other thing is you don't need to fill this form out. If you pay somebody a CPA, they're going to do it for you. You just need to say, hey, I need to fill out an 8606 because I did a backdoor Roth. They'll know exactly what you're talking about, and they're just going to ask you information so that they can plug in the numbers themselves. Not the most sexy YouTube video ever, but guys, super helpful when it comes to taking advantage of the Roth IRA. If you're somebody like me that's gone over the income limit and you can no longer take advantage of the Roth IRA, like I said, you could look up the perks of the Roth IRA. If you don't know what they are awesome. If this was helpful, guys, please give the video a thumbs up so the YouTube algorithm knows to give it to other people. Leave a comment down below. I'd love to get your feedback. Did this help? What are some questions you have? What's something else I can add if I did a video following up this in a year or two, just to let everybody else know? And until I see you guys in the next one, stay positive. Work really, really hard, and always please be kind to other people. I hope you have yourself an amazing day, a better tomorrow, and a great weekend, guys. I'll see you next time.